Welcome to the Daily Business and Finance Show. Philip Morris defends against Tucker Carlson's critiques, while footwear stocks stumble following Skechers' warning on China's near-term trends. Nike sees a rally with Elliott Hill's return as CEO, and Texas Instruments boosts its dividend by 5% to $1.36. Target's new CFO hire sparks intrigue at PepsiCo and Celsius, as FedEx shares slump due to missed FQ1 expectations and lowered financial year 25 guidance. OpenAI faces unique challenges in its possible pursuit of an IPO. Disney ditches Slack for corporate messaging according to Wall Street Journal, and Wells Fargo highlights stocks with potential trading at a discount on their value equity list. Stay tuned after the short ad break to learn more. Tucker Carlson criticizes Philip Morris International's ZYN brand, labeling it as for women and liberals. He plans to launch his own nicotine pouch brand, ALP, in November with 3 nicotine strengths. Previous partnership talks with Philip Morris International fell through.
Wire footwear stocks dropped Thursday after Skechers warned of demand issues in China due to severe consumer discretionary pressures and supply chain problems. Skechers shares fell 10.9% to a 6-week low, while Deckers Outdoor decreased 2.89%, On Holding AG lost 1.65%, and Crocs declined 2.88%. Nike rose slightly by 0.35%.
Nike shares surged over 8% after announcing Elliott Hill will return as president and CEO on October 14, 2024. Hill, a long-term Nike veteran, previously grew the business to over $39 billion. Current CEO John Donahoe will retire on October 13 but remain an advisor until January.
Texas Instruments announces a quarterly dividend of $1.36 per share, up 4.6% from the previous $1.30, with a forward yield of 2.62%. Dividends are payable on November 12 to shareholders recorded by October 31, with an ex-dividend date of October 31.
Target has appointed Jim Lee from PepsiCo as its new chief financial officer. Analysts are optimistic, citing Lee's experience in high-margin food and beverage sectors. Target shares rose 2%, while PepsiCo fell 0.3%. Celsius Holdings also saw a slight decline, likely due to potential board changes following Lee's departure.
FedEx missed first-quarter profit and sales expectations, lowering its outlook for fiscal year 2025. Shares dropped 10% in after-hours trading. The company cited reduced demand for priority services, higher operating expenses, and fewer operating days as factors. Adjusted earnings were $3.60 per share, below estimates of $4.55 per share last year.
OpenAI faces challenges if it pursues an initial public offering, mainly because its charter focuses on benefiting humanity rather than profits. Despite raising $6.5 billion and hiring CFO Sarah Friar, analysts believe an IPO is unlikely within 12 months due to its complex structure. Early investors like Microsoft would benefit most, but going public brings regulatory scrutiny and operational costs. Analysts suggest OpenAI could improve profitability over time but caution against buying shares immediately post-IPO due to potential volatility.
Disney will stop using Slack after a cyber attack leaked over a terabyte of data. Chief Financial Officer Hugh Johnston announced that most Disney businesses would transition to new collaboration tools by year-end. The hacker group Null Bulge was behind the July data breach.
Wells Fargo Investment Institute analysts have updated their value equity list, featuring stocks from the Russell 1000 Value Index. These stocks are believed to be trading below their true value and have potential for long-term returns. Notable picks include Verizon, Disney, AutoZone, Kroger, ExxonMobil, Citigroup, CVS Health, Emerson Electric, Applied Materials, DuPont de Nemours, and Simon Property Group. Thank you for tuning into the Daily Business and Finance Show. Stay informed, stay ahead. Join us tomorrow for more insights and updates. Goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. It's been a pleasure, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.